Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, daily chart to begin with. The lower band ride is done. You can see we spent the entire day yesterday above the yellow line there, the second standard deviation lower band. The blue line here is your 9-day. That's going to be our first indication as to whether the bulls are going to do anything sustainable or whether these pops are all going to be contained by the 9-day. If the pops are all going to be contained by the 9-day, then we're going to continue to trend lower on basically every longer term time frame. We've been talking about this all week. The moving averages are all lined up. 200, 150, 29. It's a big old rainbow going down. When the moving average is rainbow is when we are really, trending. Hourly chart. It's a consolidation zone, broke down to 36.13. They took it as high as 37. What was it? 37.51. Yeah, 37.51 quarter. We made a higher low here. We could be putting in a lower high here. So basically, our end of the week present is, some kind of a, triangle-ish type thing on an hourly chart, which is just, more consolidation in a wider area. I would expect that to continue to narrow if that's what it wants to do, probably centered around 3660 to 3680, 3660 to 3690. And again, I was mentioning this in the chat room yesterday. I think that we become a little desensitized to how volatile the market is right now. It's extremely volatile. You're talking about a consolidation zone here that peak to trough was, 60, 70 handles. Not 6 or 7, 60 or 70. I'm talking today about a resolution zone that's 30 handles wide and a chop zone that's, 10 to 20 handles wide, arguably, depending on what you want to do. So don't fall asleep on how volatile things are, and because when you do that, you tend to not respect how volatile things are. Things remain very volatile. Stick to your risk. Don't start widening stops. It's not how it works. We use standard stops in the room. Standard, we risk a handle and a half, 6 ticks, $1.50. That's it. That's all it is. We put a 5-point or a 5-handle disaster stop on either end of any trade, just in case one day we hit the button and something horrible happens, or the broker screws up the handle and a half stop or whatever. There's a backup there. But the intention and the way it plays out in practice is that we risk a handle and a half. That's whether things are tight or whether things are loose. Your risk should not adjust according to like ATR or anything else like that. Because all you're doing is setting yourself up to lose more money in wider markets. The way we do it, when markets are more volatile, on a relative basis, we're taking less risk, which is kind of cool. Want to show you guys the 5-minute chart today. This will be on the briefing report that's going out later today. So the regular session open yesterday was 94.25. They took it up there. What did they do? 93.75 there. A little bit before 5 o'clock in the morning. Europe was pretty boring. You can see where they put that higher low in yesterday, down at 36.22. I was mentioning in the room, they really needed to take out 13 yesterday. They didn't do it. Then they go ahead and put in a higher low. They lifted into the close. Now, there's been lots of lifts that have all come back in. But the difference between this one coming back in and the other one's coming back in is that as of now, we have, not as of now, it did not take out the prior day low. We'll see if today takes out yesterday's low down at 36.22, but that remains to be seen. Absolutely happen. Now, you've got the hourly mid-band here at 36.60. Volume weighted average price, basically 70. You got 5-minute mid in the mix there, 72 quarter. Proprietary moving average is up at 80, and this little blue line here is the 5-minute mid-band. So for me, realistically, you've got a resolution zone that runs, from 60 to 90. You got a lower high here that they have to deal with, and you got the hourly mid-band, which you absolutely have to deal with. If one side or the other is gonna take this tape where it wants to go, you have to deal with that area. So 3660 to 3690 is a resolution zone. 70 to 80, in the room we call the gap between volume weighted average price and our proprietary moving average. We call that no man's land. We try to never trade inside of it, although there's a couple trick trades that we use with it when it's particularly wide, which is fun. But this whole area has got to, and look, convert 60 bears. I think you have a chance to go back to 13 or below, because heading into the weekend you'll have people saying, well, I'll deal with this on Monday, and that's how the bid walks in the afternoon. Convert 90 and you're going to have people saying, well, I don't want to get left behind, and they kind of walk it up into the close, and whether that's true or not, that's what Sunday night and Monday morning are for. So that's really where we are. It's got to deal with this zone and what lies on the other side of it. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Watch out for, look out today on social. It'll be up on the website, the relaunching of the briefing report. That'll be out in about an hour. All right, take care. Great weekend. Be good. Talk to you soon.